Hi, welcome back to my YouTube channel. Today I want to talk about a few things, and tomorrow I'll be talking about the other. Tomorrow I'll be talking about Wi-Fi modules, custom Wi-Fi modules by the public, and today I want to talk about Uganda's cashless economy and why it has failed to achieve it. All right, so right after COVID, Uganda tried to establish a certain sort of cashless economy because after then, people were buying merchandise online. People were receiving deliveries. In fact, it created a new normal. These deliveries were there before, but at that time, they were cash on delivery. It was something that was introduced by Jumia Foods, Cafe Javas, but these other enterprise players, they never had it in context to adopt it because our people were still so much onto the cash economy, and their fear was losing that little that they had. Okay, losing the transportation fees were unfair. For example, I'll tell you about this the safe border delivery side, delivery element. You'll find that where someone can walk for 15 minutes, safe border would double the charge. Where you have a border, where you can get a motorcycle taxi and you go at 2,000 shillings, Uganda shillings, that is the equivalent to 0.7 of the US dollar. Safe border would double so that it becomes 1.4 US dollars or 4,000 Ugandan shillings. Yet, it was a one-way journey. You get it, eh? So, people hardly adopted to that. Now, what happened after COVID? It became a new normal that people could now order because even the transportation was becoming fair. People were earning from it. Now, the context of cashless had started being adopted up to about 70%. But it later on failed. Where does it fail? Let me explain. After this thingy, they have a certain reasoning. They were like, mobile money is now trying to take over the bank's priority or core service. Okay, people were no longer saving money in the bank. They would save it on mobile money because they could easily access it anytime. Whereas the bank is closed or the ATMs are far, mobile money kiosks were everywhere. Okay, you can't walk 2 minutes and you cannot come across a kiosk. So people were getting adopted to that. Okay, so led by Equity Bank, they started forefronting what they call Equiduka, all agent banking. Now, it was a good introduction, but the terms through which it came were not the best. Their intent was to fight mobile money services or transactions that were depriving them. But remember, the same people had already started adhering to bank to mobile money transactions. So which means whenever you opened an account, you had to sign whether you can transact using your USSD mobile phone service, which was working. Okay, now they were fighting that. However, it failed, but I'm going to give you the core reason why it failed. Because before it was even cheap. Now, in their context of fighting the element, this is what was required. Because each bank was taking into that, which means now people had to live out using ATMs, okay, so that they can go to the mobile money agents. Mobile money agents, so that they go to the agent backing individuals. Agent backing individuals had risks they had to look into. One, on mobile money, we have limited transactions. In most, it is rare to find people who are transacting more than 1 million at a go. In most cases, you have people withdrawing 300,000, topping up 300,000, withdrawing 500,000, But with the bank, someone was trying to avoid the journey of going to the bank to pick 4 million, 5 million, 10 million. Okay? Giving them a reason why they shouldn't go to the ATM. So, these people had to have cash, large amounts of cash, which made them prone to attacks. And these attacks are usually by gun-oriented thieves, okay? Who are, what do they call it? Robberies, gun-aided robberies. So apart from that, this person also had to, apart from the aided robberies, this person had to have a lot of money to serve many customers to equate the commission they get. For example, a person who had, for you to serve 45 customers, each taking 1 million, you had to have 45 million. Okay, so what happened? You could have 45 million for one bank, which is Equity at the time, another for Stanbic customers, another for Pride customers, another for Absa customers, which became a problem. So you could hardly have all that money. So some people created combined kiosks to serve those clients. But again, the requirements were ditching the service. How? For me to transact at the time, I had to have my national ID, my original national ID. Yet when I go to the ATM, the only thing I present is a card. Time came, they thought through the box. Then they brought again, for me to transact, I'm supposed to know my account number off the head. One, either I swiped the ATM and entered my PIN. Two, all I could have, the ATM now was no longer required, but banks like Stanbic created the Stanbic app, I think the FlexiPay app, where I didn't need to carry the ATM card, but I needed to know my account number off my head, which is also difficult because you'll find a bank like Stanbic or even other banks, they have account numbers that are up to 13 numbers. So that alone was fighting their own innovation. Okay? Now, how did it fail? Right now, still, you can transact getting money off your phone, off the bank, onto your mobile money account. But you guys are going to tell me the dilemma. I'm charged transacting from my mobile money account, loading onto my bank account. I'm always charged a certain fee. And they will tell you, they'll convince you that fee, even if you're sending 100,000, they'll deduct between 1,500 to 2,800. And they will tell you that fee is like you sending mobile money to another person. Okay? But when you're sending mobile money, 100,000 to another person, they only charge you 1,000 shillings. Now, again, if I'm withdrawing from my bank account, I'm charged 2,800 shillings plus another tax of about 60 or 160 is 280 shillings to put it onto my phone. After putting it onto my phone, where is it? After putting it onto my phone, again, to withdraw, I'm charged another amount to withdraw from the cashless economy, from my mobile money account, to put it onto, to liquidate it into cash. I've been taxed 3 times. I was taxed when I was uploading to the bank, and also the bank makes a deduction still then. I'm also being taxed. At the end of it all, I lose more. So you cannot tell me you're creating a cashless economy when on every transaction you're taking a percentage more than the customer can afford. And that's why in Uganda, a cashless economy is a dream until greed by the government is cut off. But as long as our government is still greedy, they are increasing tax on transactions. Okay? On each withdrawal, the government is taking now 5%. It was taking 10%. Plus the withdrawal charges, which again they are taxing the telecom. On each withdrawal again. So those digital transactions, there's a time when the government was taking 10%. Oh no, it was 15% withholding tax from any digital transaction commission. Can you imagine? Yet they again take off VAT of 18%. So if I'm going to go and take fuel, the answer is obvious. You will be charging me. So what I'll do, I'll have my cash for the fuel rather than using the cashless economy, because there is a certain charge that is taken away. So if I'm taking frequently, okay, which means I'm losing a lot of money, I'd rather have my cash. That is why in Uganda, a cashless economy is still a dream. So the core issue here is the greed by the government on overtaxing transactions. There's a lot of taxation that is put on those transactions. On my next video, I think I hope I'll be talking about the UCC saga with these wireless service providers now that are putting Wi-Fi and serving domestic customers. Let's meet in that video. Do not forget to subscribe, like, and share.